my name is Stan and we are starting out our streaming session, our analytical session today, which will be broadcasted live. All right, so I hope that you see me well, and I hope that it will work as expected. Okay, give me just 1 second. I will make sure that everything works correctly and we will get started. One, two, three, checking the sound. It's live. Yeah. All right. The broadcasting is live. All right, fellow traders, guys. So my name is Stan. I'm a senior trading specialist at Exness, and in this video, which is not video to be specific, which is a live broadcasting event, so we will be going through the markets. We'll be trying to understand, to figure out what's going on today, how to find and spot trading opportunities in today's turbulent markets. And specifically, this edition might be really interesting because with tariff situation with Donald Trump hitting the markets on weekends, so we had a lot of liquidations on crypto exchanges and the markets were really volatile. There has been a turmoil. And many traders ask how to trade within such markets. Well, we will go through that now, but before we get started, so just a few words about how do we trade, how will we, what exactly will I deliver during this session. I stand for managing risk all the time. So whatever you do in trading, make sure that you preserve your capital. So don't, I encourage you not to be involved in strategies that do not have calculated risk. Some strategies, they might earn some decent amount of money in the short term, in the medium term, but then they might go bust. Specifically, we've seen a lot of cases like that with greed bots, martingale type of strategies, which are promoted by crypto exchanges. So that's not in any case, it's not a discouragement to, to participate in any other platform, but make sure that you know the risk which you are participating in the markets, period. And also disclaimer, so what we'll be talking about today is just the ideas, that's a personal opinion, and by no means it may be served as an investment a recommendation or advice, so treat it with skepticism, do your own research, and do not blindly follow anyone's tips or ideas or any signals, whatever it is. Okay, so with that we are going to get started. All right, so I will show my screen, so you will see the Exness stream channel, the Exness website. Here it is. So let me just quickly go through what we have in Exness here. So first of all, by this tab you see the website of Exness company, exness.com. So for those of you who don't know what Exness is, it's a broker, CFD broker, which provides you the access to many types of assets. You can trade currency pairs, you can trade commodities, you can trade cryptocurrencies, you can trade stocks in form of CFDs, contracts for differences. All right, so what do we have here? So for example, for purposes of this broadcasting session, we will be using analyst views, market news, and economic calendar in the first place. We are starting our analysis not with charts, though people usually start trading with charts. They set up their MT4 or MT5 account, they stare at the charts, they find technical patterns. We will also go through charts, but a little bit later. So in this session, I will replicate the top-down analytical process, which will help you find a good trade. Because if you just blindly follow the price, there is no edge, there is no advantage, there is no alpha. By following the price. Many people who just follow the price, they will get in, get out, so that doesn't make any sense. You need to know what you're doing, you need to know where capital is flowing, whether there are upcoming big news ahead, and we will try to discover that in our session. All right, so let's go first to economic calendar, and we are starting with understanding the sentiment for American dollar all the time. Okay, so here I put USD, which is American dollar, and This is the first week of February, right? And as you might know, the first week of February is famous for publication of employment data from the United States. Other than that, by the way, yesterday we had manufacturing PMI. That's also quite important publication because it is a health indicator of the economy, but not from the consumer standpoint, but from the production standpoint, from the business standpoint. Basically, it's nothing more than a poll that is made by Institute of Supply Management. They just interview some supply managers who just make purchases and buying, and they ask them about sentiment. How do you feel your business is going? So whether a business is contracting or expanding. So this is just a poll. Well, so we will not go through these numbers now because it has been yesterday already. So not a big deal here, but they were not negative. Bunch of publications for stocks, for earnings, right? Because US market is also stock market. It's not just American dollar. And this week is the earnings week. How does earnings week affect you if you are not trading stocks? Well, I would say this is an indication of sentiment for speculative assets, for risky assets. For example, if you trade Bitcoin, Ether, Solana, anything else, so understanding the sentiment for US stock market might be crucial because Bitcoin and NASDAQ have correlation, because also Bitcoin is included as an investment asset in the list of recommended purchases from investment banks. Well, it was not so some time ago until the situation in November when MicroStrategy, that's the largest company acquiring Bitcoin, was included in NASDAQ. So after that, since then, Bitcoin started to correlate with NASDAQ back again. What do we have here? Google, for example, which is Alphabet, PayPal, technologic AMD is a chip maker, large chip maker. So most of earnings are published after the market close. So beware of that. All right. So February 5th, also we have some preliminary employment report. Okay, so the ADP, that's an alternative poll. That's not an official publication of employment. But if we scroll it down, also a couple of publications from Institute of Supply Management, not that important, but the most important is, so the important publication would be on Thursday, which is initial jobless claims. That's not the super important report, but the super important report is going to be published on February 7th, which is non-farm payrolls report. All right, so non-farm payrolls is the leading indicator of the health of the US economy. So let's take a quick look what we had so far during the last publication. So here is, by the way, the official website of the US Bureau of Labor Statistics. The source of the information, so basically this information is official for all investors, hedge fund managers, investment companies, they all watch this website. All right, so let's see payroll employment statistics a little bit from the last publication. So this week we will know what's happened in January. But now let's filter it out a little bit to see what dynamics do we have. So the dynamics is pretty positive. In November, in December, we had pretty strong numbers for NFP publication, meaning that this situation usually plays on the side of American dollar. Whenever we have strong publication, well, especially stronger than expected, we might see the strengthening American dollar. That's usually how it works. That sometimes it affects US 500 or S&P 500 index, sometimes not. But usually that plays on the side of the American dollar, of tightening expectations. Strong numbers lead to expectations that economy is strong, that the interest rate should stay at the same level. It should not go down anytime soon. All right, but let's watch some forecasts on trading economics. Trading economics, I like this website because it enables us to see projections and expectations. For example, if we go to non-farm payrolls here, you see that the previous was 256. The consensus forecast for this publication is 170,000 payrolls. If this number is going to be higher than this one, so that would be, forecast is 205, this one, it is here. All right. So basically, if we click it here, we will go to the corresponding link to trading economics here dedicated to non-farm payrolls. And give me just a second. My website is loading. All right, so these are pretty strong numbers, right? Pretty strong. And here you can click the forecast tab. Forecast tab shows the approximate expectation for the upcoming publications. For example, we don't know this for February yet, right? In March, by the way, for February, it's going to be published on 140, 180. So that's the expectation. Expectation that this number will slightly go down because of the inflation, because of the high interest rate. We never know what's gonna happen, but probably it will be slightly lower. That the January's indicator will be slightly lower than the one from December. But the question is not about numbers, but the question is about how this number will be different from the consensus. So let's see if it will be stronger or weaker. So we will see. Now, for the beginning of the week, in order to build trading ideas, what we need to do, we need to understand the sentiment for American dollar. And we can watch it in a couple of places. The first place is the CME Group FedWatch tool. So basically, that's the website that shows you changes in expectations about the interest rate for the United States, which is set by the Federal Open Market Committee, by Fed, the Federal Reserve of the United States. These numbers don't tell us a story yet. For example, for May, we see that 64% of traders think that interest rate will stay at the same level. For June, 45% of traders think that it will go one step down, half a point, quarter a point. And in July, for example, there is some consensus that we will still have between 4 and 4.25. But what we care about is a change. Trading is about change, whether something has changed within expectations. And we see some changes here. We see that, for example, for July, for June, so we see some tightening of expectations. See those lines going up. For example, at the end of January, the blue scenario is basically the interest rate kept at the same level in June, was 23% of probability. Now it's 40% of probability. So that means that overall, generally, the sentiment is tightening. I mean, the American dollar, sorry about that, the American dollar is kind of getting back in play, getting back in favor. So if I see the dynamics here working like that, so that's completely free information, by the way. You don't need any paid subscriptions to view that. That's posted officially on the Chicago Mercantile Exchange based on the derivatives of interest rates. So yeah, that means that some tightening for American dollar, some sentiment towards the American dollar. The same situation is for May. Now we have 66% that it will be kept at the same level in May. For March, it's already pretty stacked. 86% of traders think that interest rate will not go down anytime soon. How does that affect markets? Usually that affects markets in a way that American dollar starts experiencing some inflows. But that's not the only indicator that we see. Another one is yields of 30-year Treasury bonds, which is visible on the website of cnbc.com. Also, it is posted on MarketWatch, wherever else. Well, if you have Bloomberg terminal, obviously it's also posted here, but you need to be a professional money manager to have it. So, but we don't need it actually. We don't need any Bloomberg terminal. We see yields. Yields are increasing slightly. So you see the situation. And also after the tariffs, after the tariff situation, after the President of the United States, Donald Trump, had imposed tariffs, well, he postponed it, okay, for 30 days with Canada. But this overall sentiment plays on the side of the American dollar, because American dollar is a safe haven currency. And I think currently in January, in the beginning of February, we have the sentiment inclined towards safer assets, so the safe haven assets, or in other words, protection assets. We've seen gold going up. We've seen American dollar keeping steady. Well, maybe yesterday it was a different situation. It was kind of volatile, going back and forth. Yields of government bonds of the United States keeping steady, and the Japanese yen also attacking other currencies, so it was keeping steady. So meaning that the capital is being preserved by money managers. They don't they don't blindly put it to the risky speculations. They don't do that because we've seen a lot of drawdowns for cryptos. Now many of them are already bought out. But okay, so let's just take a look what charts tell us. So charts tell us a story, okay? First of all, we start with the American dollar index. American dollar index has corrected slightly after yesterday's gap. It's slightly corrected, but the overall sentiment remains intact. So it remains strong, right? So if you take a look at the American dollar index from the bigger perspective, you will see that it still continues going up. So the easiest way to view whether we have a trend or not, so it's to build the 200-day moving average, which we will do right away. And we see that, yes, it had started in November 2024. The sentiment has shifted. The price consistently keeps above 200-day moving average, keeps here, keeps well. And also, if we build another benchmark, which is the 20-day moving average and 50-day moving average as well, we will see that the market keeps above the dynamic support area. Dynamic support is basically the combination of two moving averages, 20, 50. Okay, we always start with that. We're analyzing the market. Start with daily charts to get the idea, to understand what's going on. And you see what's going on. So American dollar kind of is pretty strong. It's pretty strong, right? Not from just technical perspective, but basically from fundamental perspective. And it actually pressures some currencies against the American dollar. For example, you've seen Euro USD. Well, now that pulls back, right? But it is in a confirmed downswing. So how do I put downswing here? So basically, if you see these two waves of action, so the downswing is basically the point where you can track it, monitoring 4 consecutive closes above the peak, above the high. Day number 1, 2, 3, 4. Whenever you have 4 consecutive closes above the high, you have the reversal, you have the confirmed downswing here. We are in a downswing yet, and this situation might actually continue to go down as follows. So for example, now we have the 1 day of correction, maybe second day, third day of correction, it may continue moving down. So I don't know, nobody knows what will happen in the future, but still we can assume that this scenario might happen given the local weakness of the euro against the American dollar. I don't think euro is the weakest currency so far, but according to what we see here, that might work like that. All right, so that's also the dynamic resistance. The combination of two moving averages is also the dynamic resistance. However, in order to have market moving down, it might need to violate the previous local peak, at least local peak, which, for example, we have it here, January 30th. Okay, so let's mark it on the chart. In order to have the market moving down, so if you want to short this, I would specifically and generally do this from this point, because I think that would be much easier to do if it violates the previous at least correctional peak. We have also yet another peak higher, which is 105.34. Well, I think it will take a lot of time to go to this level because it's 200 pips. The average volatility for Euro USD is for the day, I think it's worth maybe 80 pips ish. Let's take a look at that. For example, average true range indicator. It measures the ability of the price to cross the distance within a single day. Well, let's put a orange line here, or orange color. So 80 pips, as I've said, 80 pips a day. If we take the fourth digit after the decimal point, 80 pips. So basically to go 200 pips above, it needs to go 2.5 daily volatilities. I think that's a lot. I don't think it will reach this level, the higher level, but I think it can absolutely reach this level, 104.60. So if it reaches this level, I will be maybe playing in some short position. But in order to do that, I will be also checking my fundamentals. I will be checking where the flow is going, where the Fed Watch tool is pointing, watching these lines, okay, from the historical tab here, where this line is going, I will be watching. And also I will be watching yields of government bonds, where they are moving basically. If they will be stopping to move, to rise, or maybe it will go down, I will be maybe pausing my idea for short in USD. If it will go up, so that will confirm my short idea for Euro USD. All right, let's continue watching the markets. What else had happened? For example, which is do you think is the weakest currency so far? I think it might be the Canadian dollar. Volatility was tremendous for Canadian dollar, you see, but that's in a confirmed uptrend too. Yes, after imposing tariffs, after then canceling tariffs, well, that shows the remarkable volatility. By the way, not only Canadian dollar, Mexican peso showed the same behavior so far. So first it gapped up, then it pulled back with high volatility, with the same pace, and currently we see it consolidating again at the support. So I don't think it will maybe move immediately higher, but at least I think we see again some pressure against the Canadian dollar. Maybe the hardest situation is over. But yeah, if it consolidates a little bit, for example, if it violates the previous low, well, we have a pretty decent chance of continuing this price action. Okay, let's put this static level. That's a dynamic level of support, and also the static level, which is located just below the previous low. So if it tests 142.64, well, I would be absolutely considering maybe going long for USD versus the Canadian dollar, because Canadian dollar is under substantial pressure right now, even though it's already at the peak. If we take weekly charts, we will see that, well, I guess it's also a long-term peak starting from 2022 already. But that's an interesting situation, not just from a technical standpoint, because we see the technical chart here, but also fundamental standpoint. Because if we Google interest rate Canada, and we click the first link that pops up in search, we see that it's Canadian interest rate. Okay, it's moving down consistently since June 2024. Now it's 3%. But what we care about is not just the current situation. What we care about is forecast, to expectations. The expectations are pointing to the more declines, to 2.5 potentially. So that currency is on the track of losing yield or losing attractiveness. Whereas the American dollar, well, it might also be on the track of losing attractiveness, but not that quickly, okay? Because you have seen that until June, until July, nobody expects the interest rate to move down for the American dollar. That's why capital flow will flow out of Canadian dollar in favor of American dollar. Usually that works like that. So that's why in the long term, I think that would be absolutely the pressure for Canadian dollar. Not maybe today, but after some pivot moment in the near future, maybe this week later, or maybe at the beginning of next week. Another potential situation might be for Canadian versus yen. That is short in this case. Yes, I know that's volatile, very volatile, and yen also is volatile. But, well, yen is persistent, so it's pushed down by carry trade operations, especially when S&P 500 index and NASDAQ are moving up, and we've seen this behavior on Monday, so they have skyrocketed from the bottoms, and yen was moving down. But from a long-term perspective, nothing actually changes. So Canadian dollar versus yen, for example, if you see that on the chart, is located in confirmed downswing. So how do we identify confirmed downswing? Well, mostly that's a situation when we have, again, 4 consecutive closes above, when we do not have 4 consecutive closes above the low, okay? So we had a low here, then 1, 2, 3, then it continued to move down, established another low, 1, 2, established another low, established another low. Now we are in a pullback, the 2 days of pullback. So basically, if the structure keeps, for example, tomorrow, the day after tomorrow, that might be another potential pivot moment. So market may again turn into another wave of selling. Well, of course, we don't know the future, but that might be a decent trade considering the discrepancy between these currencies. The capital flows are flowing. The capital flows. Sorry for this phrase, but the capital is flowing towards towards the yen against the Canadian dollar. But I think specifically it would be inclined more towards American dollar. So American dollar is slightly more bullish on USD versus Canadian dollar than bearish for Canadian versus yen. So that would be my choice actually. If I decide to trade it, that would be my choice to set up a pivot moment. I mean, if the price will pull back, so I will be monitoring for some pivot moment, which might be not that difficult, by the way. It might be just a candlestick to the upside, one day closing to the upside from the bottom, so the second day you can continue moving up. All right. Well, we don't know. Maybe that's already the peak. We don't know that yet, but the trend is still on. The trend is your friend, so let's not forget that. All right, I know everybody trades gold, so let's take a look at what's happening with gold. Gold is at the peak, which confirms this nature of market flying to safety, flying towards safer assets, safe havens, and gold is a protection. And now it's 2,800-ish for the troy-ounce, and that's already another historical peak. So even if you see the weekly chart, you see that's another historical peak. And that's a good question, whether you need to jump in on this move or not. Basically, I think that it's not a good idea yet. Well, it's in a confirmed upswing, though, starting from January 5th, 2025. All right? Which is the current year. So, believe it or not, so it's hard to imagine, but we survived 2024. We're already in 2025. So who could believe that, right? But still, it's moving up. It's moving up, starting from even, I think it's December 30th even. So that's a strong upswing, right? But it's already mature. It's super mature, meaning that if you calculate the number of candlesticks here, so it started December 30th, now it's February 3rd, so more than 1 month in almost unshakable swing. Well, there have been pullbacks, of course. There have been pullbacks. But usually market never goes like that in a straight line, so it should find some peak here just statistically, because statistically we never had such elongated moves in the past, in the history. Well, we did have some moves, for example, starting February 20th and April 24. Basically, that's 2 months move. Well, less than 2 months, slightly less than 2 months, but close to 2 months now. We might have some inertia for this market, but still, even this situation, you see the market first stops, so it's not going higher without any pullbacks. It stops in a consolidation. That consolidation was pretty long. It's a 2-week consolidation, so market nevertheless never grows without any consolidations. Now we did grow without any consolidations, any substantial consolidations, just the regular growth. So I think that actually that we might be close to the situation when it will peak, not necessarily moving down, but it might consolidate, meaning that it will be unable to cross the peak at some moment, and it's called a change of control. When we have the actual accumulation from buyers, so it will be going higher and higher until it comes to the distribution phase, or at least the consolidation phase, when market needs to settle down to find the equilibrium near achieved prices, and so on and so forth. Does that mean that you should short such a move? I don't think so, because shorting the strong trend, shorting the strong move is basically not a very good decision. Not a very good decision at all. So I don't be advocating for shorts here, but I think that if it consolidates, you see the dynamic support is pretty close to the current price section. So if the price, for example, consolidates, maybe you can, I don't know if it will go that deep, so that's just an assumption. But if it pulls back to the support, so it will be excellent point to actually jump in and buy it here. As for now, well, I don't know. So as the peak might be already close, if you're a day trader, you might still take a risk and try to monitor for false breakouts to the upside, okay? What does that mean? So for example, you see some consolidation like we see it here. For example, some triangle, whatever it is. So for example, market will continue doing something like that. Well, your course of action, if you want to play short, would be to carefully monitoring for the conviction of buyers above such a level. For example, if you see that buyers are unable to break the ceiling, they're standing here, that might represent some short opportunity. well, you should be very careful, because going against the trend requires the concentration, focus, and fast reaction. So for example, if anything goes wrong, you need to close your position just immediately with a tight stop loss. But if you find the position with a tight stop loss, sometimes shorts work very quickly, very quickly. I don't know if it will happen right now, because sometimes it works just like that. It breaks consolidation to the upside, another consolidation, yet another consolidation. Only after that it reverses. So you should be very careful. You should not overtrade in this situation. Well, that's not a recommendation, of course. That's not a trading recommendation. But counter trend trader would be possibly trying to jump in here at false breakouts. Breakout has happened. It proves to be false. That's a bullish trap. You go short. Well, that's not a recommendation again. So consider your risk tolerance in your trading to do that. But I do such trades many times. Okay. And well, the hit rate might not be that good, but if I hit the target, so the potential profit might be pretty decent. All right, what else do we have currently? So we had crude oil, by the way, plummet into the support. Now it doesn't show any signs of strength yet, even though we had such a big trend before. It doesn't show any signs of strength. It continues to be pressured down by the extremely weak sentiment. So nobody likes to trade crude oil today after Donald Trump promoting the narrative, drill baby drill, like he said, right? So that's a bearish factor for crude oil. Crude oil was basically on the go, on the rise, due to seasonal demand, seasonal factor until January 15th. That's called the withdrawal period, when the stock from the Oklahoma storage, for example, is being consumed. So they are taking it to burn it and to produce gasoline, produce other fractions of oil, actually to basically to burn it for electricity, burn it for warming, burn it for production. So that's basically a seasonal demand factor. But this seasonal demand factor may be already over, so this peak might be the final peak. I don't think it will be, you know, crashing and collapsing just like that. So sometime in the future, probably it will create a pullback. The pullback will be temporary, and after that it might continue moving down. Why am I thinking that intermediate term perspective for crude oil is still down and not up? Well, that's very easy. We need to understand the expectations of the market. And in order to do that, we can go to the Energy Administration of the United States, which is monitored by most of commodity trading advisors, which basically bring a lot of volume in speculations in the market. And what do we need to see here? The so-called short-term forecast, TEO forecast, represents the current expectations of the market. So for example, here it is, okay, eea.gov/outlook/STEO. Clicking it here, we see the expectations of the market. That does not mean that the market is necessarily right all the time, but professional traders, money managers, they treat it as a short. I mean, as a potential decline throughout the period of 2025 and 2026 as well. So you see that we have some seasonal demand already discounted in the action. Here it is, right? So the small spike to the upside, and that it's expected to move down. And the average price to do business for crude oil futures is expected to stay at the level of 70 in 2025 in average and 60 in 2026, okay? That's a demand and supply factors. So that's why it's pressured down. So it's not that optimistic, so it's pressured down. Even if it pulls back, so probably it will be trying to I don't know, achieving 60 in the medium term perspective, achieving 60. We don't know how quickly it will achieve 60, but 60 is probably another expectation, which is an expected level, right? Expected level, which market looks forward to be reached for this type of asset. All right, so yeah, and if we put here some market structure indicators like moving averages, let's put it double again. So we see that the price, yeah, it's pretty close to the dynamic resistance area or support area, if you will. It's called value area sometimes. So we might think that it might retrace and find some support just above this area a little bit and maybe above some static levels, which static level is This peak 74.27, another peak of 74.80, but maybe it will just not reach any of these levels. Maybe it will outpace it, go even higher. For that projection, we might use Bollinger Bands indicator. So usually market finds some resistance just above the medium line of the Bollinger and below the upper band of the Bollinger, somewhere like that. So do you need in this case to play on the long side for crude oil? Well, you decide so, but if I will see responsive action, some bullish bar, I will be definitely monitoring for the maybe going long, at least for short term, and then going short in the medium term. I know maybe not many people trade in crude oil, but still I think that's a very interesting market. It's very volatile, so it tends to cover big distances within a day, approximately 150 pips. Now the volatility is pretty low, you see, and when volatility is low, it precedes big movements. Volatility was at the bottom. In January 5th, volatility was at the bottom. Usually that precedes big movements. So just if you take a look at this pattern, whenever volatility drops to the new low, market tends to shake, okay? The big moves tend to happen. Not just regular 2-day, 2-3 days moves, but intermediate term moves, right? For example, from 93 towards 70. Another bottom, the move from 86 towards 74, $10 move. Another bottom from 83 towards 65. Okay, we have yet another bottom now, and maybe we are now in the situation of another bigger move. So the peak was 79, maybe we'll reach 65 or something. Maybe it will not reach such a pullback, but at least some pullback will be possible here. And after this pullback, it's completely reasonable idea to try to jump in on this move, because this was the new bottom for ATR that precedes a big move. The big move may have started already here in January 19th, okay? Maybe like that. So with achieving the new low, I don't know about 60, guys. I don't know about 60, but at least I know 65, 64, the previous low, intermediate term low, is absolutely possible for crude oil. All right, so we have spent too much attention to crude oil. Whether you're trading it or not, I don't know. Bitcoin, right? Let's take a look at Bitcoin. Many people trade Bitcoin nowadays, and they want to know what's gonna happen here. Well, it's pretty interesting situation. Yesterday there was a big spike with the market recovering from this loss. A lot of liquidations on crypto exchanges. It's recovering the loss. And a good question, whether the trend is still on or not. Well, usually when you have such a big responsive bar, well, we have pretty decent expectations of market keeping above for 2 to 3 days. For that, we might go to intraday action and see whether the market is located at potential intraday pivot point or not. For that purpose, for example, we don't need moving averages here, because it's an indicator for daily charts. For that purpose, we might need Bollinger Bands to get the idea of whether we're close to the bottom or not. And yes, we're closer to the bottom than to the peak right now, because the potential peak of the action has been at the top of the Bollinger. Potential bottom of action was actually below the Bollinger, 99,200 something. So that's a potential bottom. And if you see the volatility for this time frame, let's put average to range. The peak of volatility was $1,400. So if you take this peak and put your stop loss, for example, below 98-ish something, 97. So I think that might be reasonable to maybe try to buy some Bitcoin. Well, that's not a recommendation, right? But if it pivots, that might be pretty interesting in terms of combination of reward in comparison to risk. So when we're trading, we just don't want to capture small moves, right, here and there, unless you're not a scalper. But what you really want to achieve is the decent ratio, the asymmetrical trading opportunity, the decent ratio between your reward and your risk. Because on the distance of 50 trades, 60 trades, 100 trades. What matters is not the hit rate, really, because it's incredibly difficult to achieve the high hit rate, 80%, 90% of trades closing a profit. You can do that, by the way, in some strategies. But what really matters is how much do you earn on your profitable trades than you lose on your losing trades. Because it's relatively easy to earn a quick buck placing a tiny take profit and making it over and over and over again, like all those greed bots do. But then when volatility comes in, all these greed bots lose money, basically. Well, not all of them, but those of them who have been trading with leverage. Most of them are losing money, so that's incredibly dangerous. On the other hand, if you're following trends, that might be already different story. However, I don't know, so that doesn't feel like also the good asset to be in right now, given the volatility. I don't know, maybe later, maybe. So you see that volatility, it's incredibly high. If you take a look at the daily volatility for Bitcoin, it's incredibly high. It's already on the daily chart, it's more than $4,000. It had reached the peak. Usually when I trade, I prefer the asset to not be as insanely volatile as it is here. For day traders, day traders might like this volatility because they feel that, okay, if I capture the good entry point, the market may move quickly to some certain target, I don't know, to certain target. But, you know, that's also a double-edged sword. When you have such high volatility, so market tends to stay within a range, in a box. It's not going anywhere in the long run because investors don't like such volatility usually. Hedge fund managers who purchase Bitcoin via ETFs or any other tools, they don't like such volatility. Basically, they cut their purchases. Maybe not for MicroStrategy. They don't care. They buy Bitcoin regardless of the price, regardless of anything. They just buy Bitcoin and that's it. Period. They buy Bitcoin. All right, but so that's questionable. If we capture something here, I think it might be just a short-term move of maybe 2 days, and that's it. Maybe 2 days. I don't believe in the big shifts, because big shifts start not with that. They start with drops in volatility, as you already know. When the volatility is low, that precedes a big trend. When the volatility is high, that usually indicates a trading range or distribution phase. Okay, in the long run it may continue going up, but I think that the smoke should go down a little bit after this, you know, turbulent situation. Smoke should go down, let's say that, let's put it that way. S&P 500 is in the same situation, so it had, you know, covered the gap, but it's questionable whether it will reach another peak or not soon. I think it might, because the sentiment is still improving a little bit. Because if we go to CNN Fear and Greed Index, that's also posted on the CNN.com website, it's in a fear situation, but you see the improvement in major indicators such as price strength and stock price breadth, especially breadth indicator. That means that a lot of stocks were negative, meaning that a lot of stocks were showing negative performance. Now they're retracing, so half of stocks are going up, half are not going up. And that's already a more healthy situation in comparison that was in December. In December, market was at the peak, right? But breadth was not very good, and that's why it corrected, that fell down. Now breadth had improved, market is not going anywhere, it's in the range, it's in the box, but the breadth has improved. So basically, that's the explanation. The market is made up of thousands of stocks, and of any given day, investors are actively buying and selling them. This measure looks at the amount of volume of shares on the New York Stock Exchange that are rising compared to the number of shares that are falling, okay? That is an important indicator. So I see that this is some improvement. Volatility is slightly close to 20s, flirting with 20 level. It's not that big, that's not that high. And usually volatility is not keeping at this level for very long. So usually that's I would say, the situation when it's moving down. Volatility patterns work like that. It rises for some time, then it goes back. It rises, goes back, rises, goes back. So very rarely it increases further, very rarely. So it works in rare occasions, in rare situations, okay? All right, so that's for S&P 500 index. So I think S&P 500 index might actually climb to the new peak, might be 6,200. I don't know when exactly, but I think that this rising wave is absolutely justifiable, and we might view that on a new peak maybe this quarter. I don't know how fast it will go, but it might go this quarter. As for NASDAQ, NASDAQ is slightly underperforming right now with a drop of NVIDIA, of AMD, other chip makers. So you see that NASDAQ feels slightly worse than S&P 500 because for financial sector, communication sector, they're leading the rally right now, but not technological sector. Technological sector lags behind due to the massive hit for NVIDIA. You see what's going on. It's not recovering yet with this drop after Chinese artificial intelligence service was launched, the DeepSeek. You might know that, right? That's a competitor of ChatGPT, and that's a big competition. Okay, NVIDIA we see plummeting. AMD again is plummeting, so it's already it's not here. Okay, 20 tabs. Where do I have? Which 20 tabs do I have? Maximum limit, close existing tabs, and then all right. Yeah, I have a lot of tabs. Right, let me close some of them. Let me close some of them again. AMD. Or also at the bottom, you see that puts some negative sentiment. Well, it not only at the bottom, so but also it has been moving down since October 2024. It's in a downtrend. So that's why NASDAQ is slightly, being hit slightly by this situation. What else do we have? All right, so speaking of other currency pairs such as GBP USD, well, it's now again in a confirmed downtrend, even though we had a spike to the upside yesterday. Many people like to jump in this situation. They say, oh, that's a big bar, we should jump in. Should you jump in? I think that's still a structure. From a structural standpoint, it's still in a strong downtrend, which had started in September 2024, and also it's in a downswing yet. Downswing is a temporary short-term wave, which is also pointing to the downside. I don't know if it will go immediately down, but maybe after 2 days of consecutive or sideways action, it might continue moving down. So not immediately, but maybe on Thursday-ish, between Thursday and Friday, you might project something like the short for GBP USD. Or maybe it will start even going today or tomorrow, because still I think that's a play in favor of American dollar. And we see that American dollar is what? American dollar is strengthening. It is strengthening. That's a remarkable situation. It is strengthening. All right, so what else do we have? Japanese yen. What are perspectives of Japanese yen? Well, basically also it's being pressured by the American dollar, but it's rather sideways, because also that's a strong currency, because it's gaining yields and interest rates are going up for Japanese yen, but it's being pushed down by carry trade operations, which are still being profitable for many institutions. Though it's not that obvious. It's not obvious yet. I mean that cost of carry trade operations had already become quite high and already quite risky due to fluctuations of Japanese yen. Though I think it's pretty close to the previous intermediate term peak, which was established in July 2024. That's why I don't know. So you see this box, this trading range, that's actually a sign that the market has not determined the destination yet. Maybe Japanese yen might also start strengthening, and this box will be broken down. Currently, there is no evidence of any direction. Market is just going sideways without any confirmed destination, neither to the downside nor to the upside. So I would say that's a slight pressure to the downside yet. However, that's already the trading range, because for the last 6 days, market was unable to neither establish the new peak nor the new bottom here for already 7th day in a row. So there is no conviction, no determination with Japanese yen against American dollar. However, it might be strong against other currencies. So that's why I think that for weaker currencies such as Canadian dollar, we can absolutely project something for the short. What about other cryptos? For example, Ether, is it worth buying? Well, that's an interesting situation. Ether was actually liquidated much more massively than Bitcoin, and that's an interesting situation. Here's why. You see that the deviation of Ether from its dynamic resistance, let's put it this way, let's put it moving average of 20 days parameter, it had deviated massively. So, I mean, 3,200 was at what here at the moment of decline, and here it is 2,000. So $1,000 is what? $1,000 is basically worth 4 ATRs, 4 daily volatility values. Meaning that usually, well, that's a concerning situation for ETH. I don't know if it will pull back anytime soon. I would say it's rather a momentum trading situation to the downside. What means a momentum trading situation? That means that, well, yes, we have the strong reaction from the downside, and if we have another reaction to the upside, the next possible course of action would be to short it if it violates the level of, if it violates this formation, something like that, okay? Here it would be yet another bottom, maybe, we don't know that yet. Then we connect these two bottoms together, we get the formation, and if it won't go anytime to the upside, well, by the way, another short opportunity I think will be above this high, but it's more risky, it's slightly more risky. The much more reliable situation would be to work with a confirmed downtrend. If it breaks it to the downside, that would be much more easy to place a short trade, the market to retest 2,400 level, something like that. I think that would be a short opportunity, because 4 daily volatility is too much, guys. That's too much. Market doesn't recover quickly from that type of drop. That's too big. That's too big. All right, I think that is it for today for this market. And yeah, I think we pretty much covered everything which is on our board today. And yeah, what can I say? Good luck with your trading week ahead. So again, let's sum it up a little bit. So we will have probably, what we'll have, not probably, but already guaranteed, we have publication of employment on Friday, non-farm payrolls, so keep an eye on that. Ahead of that, market might be slightly frozen, because ahead of big news such as NFP, inflation, interest rate decisions, speeches of Fed members and politicians, it's kind of, standing without any substantial developments. It's just sideways. Right? Because big money stays out of the game. They tend to do so. So, for example, on Thursday and Wednesday, market might freeze a little bit or move just technically without any big movements. On Friday, volatility will pop up and markets will determine the direction. Currently, as we see for now, American dollar is still in favor. Probabilities of interest rate for the US capped at the same level are rising. So basically, maybe we will have some decline in June or July, maybe later, but previously it was March, now it's already June and July. So expectations are tightening, we can say that, right? If you see that, let's not forget that, right? Because that means that all, or not all, but most of pullbacks against the American dollar, breakouts against the American dollar, for example, GBP USD going up, Euro USD going up, anything else going up, that they might be false. as it's incredibly difficult to go against the US dollar right now in such circumstances. You need to develop the strong demand, which is not yet visible in the market. Gold is a different story. It has such internal demand as a safe haven asset, as a protection against geopolitics, as a protection against politics in general right now. It's a different story. It's much stronger than anything else. But still, I think it's already close to the peak because it's already 1 month of consecutive growth without any consolidation. So it might still be keeping it in some trading range, but I don't think it will last forever. Because trading ranges swings don't last forever. They don't go infinitely in one direction without pullback. So just don't forget about that. Cryptos, they have been on the massive drop. Bitcoin, ETH. Bitcoin might be temporarily on the go, but ETH, I think, is more momentum type of situation. So I will be monitoring for potential short. Not long term, of course, but maybe short for achieving again level of 2,400-ish. Because it was the level of previous liquidation. Usually price tests these levels and like that. Crude oil might be short because in the mid of January, so we've seen the the very, very, very small ATR, which precedes big movements. Maybe this move had started to the downside. So I will be watching it for the short trade after some pullback. Maybe we might catch another wave for crude oil until 65, 64. That might be a pretty good move. Well, other than that, I guess, so just as usual, regularly manage your risk. Keep an eye on the situation, manage your risk, and that's it, I guess. So thank you for coming. Thank you for watching this stream. Come to next stream, which is going to take place next Tuesday, scheduled time. So thank you for coming. Manage risk at all times. That was Stanislav, or Stan, senior trading specialist at Exness and a trader.